Hey guys, Dennis Wilburn, the AutoPilot Trader. Remember what I said to you last Friday? I said by Tuesday or Wednesday of this week, we would be in rally mode, and then I'll follow through into the end of the week, and that's sure enough what happened. Today's session, we've got 3 stocks that could be setting up for next week. Our stock pickers picked some really great stocks this week. Watch the video all the way to the end. And then I've got some great tips on how to better use the moving averages become a wiser and more profitable trader. So with no further ado, let's jump into today's session right now. Good afternoon, everybody. This is Dennis Wilburn, the active trend trader, or the autopilot trader. Welcome to this session of Trade Your Way to Wealth and Financial Freedom. Which is more important to you? I'll throw out this question to you. If you're watching on the YouTube channel, please let me know who's out there on YouTube. I'm monitoring you, but also just in the chat box, please let me know what's more important to you: wealth or financial freedom. Wealth or financial freedom. No, it's not a trick question, but it's something to think about. So just great question, Justin. Are they? And so, Justin asked the question, aren't they both the same? I don't know. I mean, I think it depends on so Stephen and Neil, what's your, which one, wealth or financial freedom?
Freedom, but I think for me, it's all relative. I mean, wealth to me might be being a pauper to someone else.
Ah, okay.
I would say financial freedom.
Okay. Financial freedom. Yeah, it's very interesting because I think that what is attractive about that is that it's the aspect of freedom. Anyway, we're having a really interesting rally day today, as you guys are all aware of. Remember that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. I want to say hi to Jeff over there on the YouTube channel. Glad you joined us over there, Jeff. And here's where we're sitting as of about 9 o'clock this morning. Here's where we were last week. We're up a little bit more, but the market has rallied. We're still beating the S&P by 41%, so I'm very pleased with that. I know Steve sent me an email, sent me a text message this morning and said he's ready. He's been buying just madly. He is all in on this rally. Right, Steve?
No, not quite, but I'm in a buy mode, yeah.
But you are in a buy mode, yeah, being so very selective on the buying. I got it.
And with a very tight leash on those trades.
Yeah. And what about you? I bet your triple screen, Neil, has been going off bam, 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 hasn't it?
Yeah, a lot of signals on triple screen, and I'm doing something different. As indicated, my stock pick for the day is in Delaware Focus List, we have based on EBITDA and growth, projected growth. So stock might look currently beaten up, but has excellent potential. And if that gives me a triple screen signal, I go for it.
Okay. And one of the things that I'm looking at also moving into this weekend is I'm looking at into the close today is, do the indexes hold on to their gains today? In other words, does it stay close to the highs of the day? I think that will be revealing to us because, we were due for a short cover, basically with the people who have been short this market, they basically have to take their profits, and to take their profits, they have to close their positions, their short positions, which means they have to buy back the stock. That can give the impression that, there's a big rally going on. And so I'm going to be, like I said, I'm going to be watching, watching the indexes to see if, in fact, they hold their strength. Because right now, the rally so far today, while it looks impressive from a price action standpoint, it's a little bit light when it comes to volume. So, right now it's suspect. Thanks for answering those questions on I like what Barry has to say. Once you have financial freedom, wealth becomes more important. And what about health? David has to say, I love that. Yeah. Financial freedom, financial freedom. Again, it depends on how you define what financial freedom is. And so let's go ahead and jump into today's session and look at some charts. And then we've got some great stocks that both Anil and Steve have put together. And I've got also a stock pick that I think you're going to like. And if you are joining us over on the YouTube channel or you're watching this video later on the YouTube channel, please, if you're not a subscriber there, click the subscribe button, hit the bell so you're notified when we do put new content up there, which is about 2 or 3 times a week, as we did last night. They're very short content, about 10 minutes just to keep you up to date on what the market's doing, provide some trading tips on the YouTube channel, markettech.k. Say hey, kid. And so thank you very much, sir. Appreciate that. Yeah, keeping that eye on that volume. As you see, let's go ahead and jump on to let me shut up and just get into market analysis. See what's going on with the volume here. This is on the S&P, but it is reflective also in the indexes themselves. As prices have pushed up here, has the volume also pushed up? The answer to that is no. Even though we are in a really nice rally mode, as you'll remember last week, I basically went out and called it. I said, based on the reversal signal we had here and also the 3-line cluster we had here, I said somewhere between 1 and 4 days after we get that cluster, look for a reversal signal. And sure enough, 1, 2, 3, 4 days, we get a breakup and now a launch off of here, gap up, very positive. But look where it runs into on the S&P, on the spiders, runs right into the 20-day moving average. That's the other thing that we said last week, is watch for a reversion to the mean being the 20-day moving average. And sure enough, we came up right up to that this morning, hit it. Now what I'm looking for through the rest of the day into the close is, how is this going to close? Is it going to close close to where it's at right now? Is it going to break out above the 20-day moving average, which would be very bullish and very positive? Or are we going to sag back into the midsection? If we sag back into the midsection of day or below the halfway point, watch for that could be a negative sign. And in reality, we could sag back to the lower third of this and actually turn today's candlestick into a reversal candlestick, which would be pointing to the downside, which again is all very common. The other thing that I could look for happening in this, what is that? Let's get rid of that. The other thing that we can look at happening here is a move on up from here, up to where? Up into the downtrend line, which corresponds with the 50-day moving average. So if we go up there, ram our head against the 50-day moving average next week, watch for a pattern similar to what we have here previously, which is basically a consolidation pattern that resolved to the downside because of why? The path of least resistance was down. So we'll see. The market is kind of like, I think, in a position where the next signal is going to tell us a lot. If we break out, look for it to move up to here. If we break down and close below in the bottom third of today's range, I would count that as a bearish or a downtrend type signal. So that's what we've got going there. Let's go ahead and jump over to I'll cover the other ones really quick. NASDAQ, very similar. As you can see, I left in this was a trajectory to the downside based on let me grab my arrow here. There's a line that goes from here to here, measure back to here, and look how close the low came last Friday of hitting that, the symmetric extension to the downside. What's it doing now? We are basically racing to the upside, But look what's going on with the volume. Again, the volume, that is not, rally breakout and run forever type of volume. That is volume of concern. However, I got to say that, where it's at right now, it's above the 20-day moving average, right at the halfway retracement on the Fibonacci. So it could push up just a little bit higher to that next Fibonacci number, which is right there at the 34-day moving average. So somewhere about, I would say, if it gets up to 296 area, that's where I'll be watching it for a potential reversal. Doesn't have to reverse, but that's where we'll be watching it for the potential reversal. Next is the Russell. The Russell basically kind of came unglued, but fell all the way down into this area. One of the things, if you watched Mike Scott's presentation with the Bay Area Moneymakers this past week, he talked about these when you get a lower low like here, a reversal signal, not a reversal signal, a pivot point where if you come pushing back up through that, that could be a positive sign. And I think that's the way we have to lose it for IW Russell. Momentum has shifted up, the volume down. And so where am I looking at it to go? For it to go into perhaps closing this window here, which takes it up to about the 50% retracement, or even to the 34. Its longer term trend is all the way up here. So that's what I'm looking at for the Russell. Again, how's it going to finish? If it finishes below 172.61, I will be a little bit more bearish, if you will. I hate to use the term bearish, but it will make this rally attempt here very suspect. And so let's see. The indices gapped up. Any thought of dropping to close the gap and then continuing? Yeah, Barry, it could do that. I mean, clearly, I'll be looking. It is above the 8-day moving average. That's positive. And as long as it maintains itself above that 8-day moving average, which is now starting to slope up, that's also positive. But the gap is slightly below that, down here about the 169, 170 level. And if it drops to that, it's breaking, it's going where it shouldn't go if it wants to maintain its uptrend. So that's what is going on there. Justin asked, what causes a stock to go up when volumes decrease? Steve or Anil, you want to answer that? What causes a stock or the indexes to go up even though the volume is decreasing?
I don't know, but I have some ideas there. I think the market always tends to go longer in any direction, longer than than we usually think.
Right.
It doesn't go 3-4 days up and then reverse. It can do anything. And I think the low volume sometimes, particularly I notice coming off a bottom, is kind of designed to fool you. You think it's a weak rally and it's not going to go anywhere. And it can go really, until it turns, it can go longer than you think.
Yeah,
I think it's bullish. It's not necessarily negative. It's not strongly bullish, but it's not necessarily a negative for the market.
Okay, Anil?
I think the conviction by the big fund is just not there. That's what it's indicating to me.
Yeah. One of the other reasons is because I agree with both Steve and Neil in their assessment, is we have to, what is going on here? Basically, what we're having is a relief rally where the shorts are covering their shorts. They're buying back the stocks that they were short to cover their position. So that's one thing that's providing an upward momentum. And then, but as Anil said, the institutions are not, they know what's going on. So the people who are participating in this move right here, nobody's selling. And so the people who are participating in this are are not the institutions, but they're just the regular, investor type people thinking, aha, we've hit a bottom. I'm going to go, and they jump on the trade to the upside, not knowing that this is probably just a relief rally. And if it gets up in here and fails, that would be called a bear trap. And it traps these guys up here who bought towards that 20-day moving average or just slightly above that. It traps them, and that's why they call it a bear trap. And it rips their legs off as it falls back down into lower lows.
Dennis, I have to disagree a little bit. I mean, the retail trader never makes up half the volume or more of any day. So the institutional guys are buying. They're not buying their usual tranches. They're not doing their usual trading, but they're buyers in there. And it could be some big guys taking their time to get established at favorable prices. So that's why I don't see it as necessarily negative. The big guys are trading. They're not trading their usual volume.
Well, I think we agree that the big guys are not buying all out.
Well,
they know what
they're not doing their usual buys, but they're buying.
They know what this is, though, Steve. They know that this is basically a short cover rally. Potentially.
Potentially, yes. We never know for sure.
And so, well, we do know for sure. As soon as it gets up to one of these higher levels of support or resistance and reverses to the downside, you go, it was a short rally, short cover rally.
If it doesn't do that, what's it doing?
That's where you have to watch it. Right now,
that's correct.
I can, and I don't want to get into long discussions because we don't have time for that in this session.
Sure.
But at the same time, if you have the experience to recognize that this is probably a short covering rally where people are covering and taking their profits in the positions they're short in, because there's a lot of people short this market. And if you take, if you agree with that thesis, then we have to look at this as, because this is lower volume, is that it is basically retail, primarily, not primarily, but some retail investors, and also the institutions, but the institutions are buying just enough to close their short positions.
You don't know that, or perhaps establish new ones. You just don't know until well after the fact. Anyway, I don't want. It's not something to argue about. We'll know it one way or the other later.
I got one short question. We don't have to answer it. So, would you buy an SQQ today?
No.
The short cubes, right? The short cubes? No, I would not. Yeah.
No.
Yeah.
And the reason why
there's a reversal for me. Yeah.
No, and the reason why I would not, Neil, is because I don't have a reversal signal.
Yeah.
I mean, that's basically it. Okay. Awesome. It's probably Pelosi's fault. That's what, no. So retail investors and shorts are making the markets go up. Institutions are tiptoeing. Yeah. I mean, that basically is what's going on. It's just, the institutions are not coming in and saying, let's buy this forever. So, Anil, would you buy SQQ today?
I'm seeing an SQQ as support at 50-day line. So if we really believe this market, this is just a relief rally and it's going to go back where it was, this may be a good opportunity for SQQ, but I'm not too sure about it. I'm thinking about it. That's the reason I'm.
Yeah. Well, I've got to have my three steps set up, taken care of. I have to either, on anything, it has to, if I'm going to be trading into the bullish direction, and that can be trading SQQ bullishly, it has to be at support. I have to have a reversal candlestick, and my momentum has had to shift with a cross. Cool discussion, guys. Okay. Steve, go ahead and tell us what's going on with Krispy Kreme here.
My pick is CRISPR. It's a bioengineering. It's a biotech play. They and University of California, Berkeley, and MIT are probably going to jointly own this gene sequencing technology.
Oh, cool.
CRISPR is a play on one of those owners. It's been a big holding for Kathy Wood in her ARC funds, in her biotech funds, and innovation funds. And I think it's not my typical pick. It's not an IBD 50, but it's a technology I believe in because I've worked in that area. And I think this is a wonderful play. And we had a point where it's given back almost 3/4 from its highs.
Right.
The weekly chart looks like it's starting to put in a potential undercut double bottom W type formation.
Okay.
And I think for me, it's worth a play. And I think it's viable right now, today or on Monday, and with a very tight leash. You know, I'd be under yesterday's low. If we take out yesterday's low, I'm out of the trade.
Agree wholeheartedly.
Yeah. Anyway, it's my first. I got bullish this week, the first time in about a month and a half.
Okay.
And I think I see signs that particularly the biotech area is starting to firm up.
And so yeah, well, you know, the thing, you know, because part of the thing in our discussion earlier is part of the thing we have to remember is that some of the largest bull rallies happen in a bear market. And so, but one has to be primed and ready to make that trade. So cool.
Yeah.
Anil, what's going on?
Yeah, I'm picking Shockwave Medical, and that's a little bit unusual for me, but one of my friends who is helping me on the Delaware focus list, he goes after the thing that are kind of futuristic, might be beaten up. But for example, this one has composite rating of only 82, but acceleration distribution of C plus and up-down volume ratio of 1.71, which is pretty unusual.
Okay.
And it's giving me a triple screen signal, so that's my stock.
I like that. Yeah.
And
I
like that high volume day about 5 days ago.
Yeah, right there.
That's often for me, it's a tell.
Yeah.
So yeah, that provides some really nice. I like it, and again, it seems like okay. Just above the down. Okay, and the one I'm going to look at today, guys, is LTHM. This is a stock play on lithium. That is needed for batteries. You know, I don't think that, you know, for whatever you think about it, is I don't think our current administration is going to stop pushing the its green agenda. And one of the things is to have more electric power, and you need to have batteries for that. And so this is, you know, one of the top producers of lithium for batteries. I just got a TSI crossover here. I wouldn't buy it immediately where it's at because it's right up against the 8-day moving average. What I would look at is look to buy it next week on a pullback down to about 22.65, or it could pull back all the way to this uptrending line here. But I'll take a look at it. I have a candlestick reversal signal there, as I have the TSI. So any pullback into the wick from yesterday would be my trigger to get into the trade. And then have a upside, you know, its upside projection would be basically breaking back up to the 200-day moving average to take out its new high. But it's that's mine.
I like it. Looks good.
And it is one on the. It's got really good. It's number 2 in its group, 98% composite and accumulation distribution of a B.
And look
Excellent.
at that volume in early May. I love the volume in early May.
Yeah, hold on a second.
Yeah.
I keep popping out of my. Would you stop it? Come on. There we go. Yeah, back in the area. It was really starting to take off.
Big, May 2nd. That really
Right
unusual volume. Yeah.
Yep.
I guess
And
on
that was
the earnings play. But
after earnings, pulled back hard and then launched back up. So it is a very volatile stock. So that's the other thing to be keeping in mind. So that's what we're looking at today, guys, for all of that. let's take a real quick look at the tip for today. One, watch the moving averages for clues. And what I mean for that is moving average can provide some excellent, reveal some excellent clues that you need to be aware of. And it'll help you to stay out of trades that you shouldn't be in. One, price action below the 50-day moving average or the 200-day moving average tends to favor downside trades. Tends to. Now, there are some bottoming, so, clues, that kind of stuff, but these tend to favor downside trades. So sometimes you wait for a pullback up into the moving averages, like the 50-day or the 200-day, and then take a downside trade from there. Two, moving averages serve as dynamic trend lines and dynamic support resistance. In other words, they move on a daily basis. So where you may have a moving average at, let's say, $50 today, tomorrow it may be at $50.50. And so learn how to estimate where that moving average is going to be. Moving averages tend to act as resistance if price action is below the moving average. Moving averages tend to act as support if price action is above the moving average. This is where I talk about the moving averages are always in a catching mode, and if price actions are above, moving average will tend to catch it as the price falls and then rebound from there. Shorter term moving averages are weaker than longer term moving average. Now that makes sense, and so that's why if prices are above the 50 is a stronger indication than prices being above the 8-day moving average. If price action slices through the moving averages like butter, using the moving averages is less reliable. And what else do we have here? Pay attention to bullish and bearish moving average crossovers. So remember, don't fight the trend. So that's it for today, guys. I want to take a look at one last thing. And Anil brought that to my attention. And let's take a look at SQQQ. Because he asked a question about, would I buy SQQ today? And the answer for me, Anil, is no. And it for the reason I stated earlier, yes, it may be approaching support, but I do not have a reversal signal here. My momentum is still shifting to the downside. And so that's why I wouldn't be trading an SQQ today.
Okay, good. Thank you.
Okay. Hey guys, Convergence of Clues scoreboard. If you opt into the Active Trend Trading membership, the free membership, you get a whole bunch of trading tools, and this is one of them. If you do this scorecard utilizing some of the investment business daily criteria, and also some of the specifics with regarding the Active Trend Trading rules, you'll know whether you should be taking a trade or not, or waiting for it. If you don't have a score high enough, you pass on the trade. So learning how to trade, step one, learn what to wait for. And then step number two, develop the discipline and to actually wait for it. So that's it for today, guys. Steve and Neil, thank you so much. And I love the discussion. The discussions are so important, guys. And as you see with technical analysts can look at a chart and see two different things.
Yeah.
And that's okay. That's okay.
Actually, Dennis, 10 analysts will probably see 15 directions.
Yeah, without a doubt.
Yeah.
So anyway, so we will call it a day, and we'll see how the market finishes up. I still will stick to my guns with regarding if we get a sell-off into the close, I'll be watching for a weak open next week. And so hey, remember, just basically practice patience, persistence, and consistency, and that definitely describes 2000 22. So until next week, aloha, trade well, and prosper. Mahalo. God bless everybody. Everybody over there on the YouTube channel. Say hey. And Jeffrey, thanks for being there. And we'll talk to you next week. Stephen and Neil, thank you, my friends. It was fun.
Thank you.
My pleasure. Take
Okay.
care.
Aloha. God bless everybody.